Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over just that massive pump on the Bitcoin chart. And of course, we did see stocks pumping as well, an extremely bullish day. We did close with a little bit of profit taking, people trying to lock in some of that money before, the announcement by Jerome Powell tomorrow and the Federal Reserve, where they'll declare just how many basis points they are going to increase interest rates by, which could have a suppression effect on the market. It could also have a sell the news effect, as we are at the supply line on stocks, and basically we've been buying the rumor of a Fed pivot, which, to be honest, is not going to be coming this year. But of course, the Fed could be slowing down the rate of increases while still increasing, but not pivoting backwards, right? Not lowering interest rates. A lot of people have this wrong. They don't know what they're talking about. They're confusing people with their weird wording of things. The Fed is not pivoting. The Fed is not lowering interest rates. The Fed is slowing down the rate at which it's increasing rates. And so rates will still be increasing, which will continue to have a suppression effect on markets, but it will be at a slower pace than what we've seen before. Now, the rumor that was being bought into this kind of a fool's rally, right, was that the Fed was going to pivot, that there was going to be this mythical Fed pivot, and everyone was super excited and the markets rallied. But now that we've reached our macro downtrend supply line, a lot of people want to take profit just in case we can't break that downtrend, just in case we can't, change our course, and just in case we continue to head down to the downside, perhaps even making new lows as we start to pivot not from inflation, but rather into recession. And as we start seeing the different PE ratios, that's price over earnings ratios, of these various stocks starting to be affected by the recession, there is more downside to come. That said, it doesn't mean that we can't continue a rally if we continue to get good news. However, the bottom, right, we will have to retest the bottom and the strength of that floor at some point. The lows will have to be retested. And if we enter a deep recession, they could make lower lows. Do you see how that works, Alpha Fam? So perhaps anywhere from now until spring, maybe latest early summer, we'll probably be retesting the lows or even making a new lower low. Okay, just keep that in mind, because a lot of people have it wrong, and you guys are getting the alpha. You guys are getting it straight from a straight shooter. Okay, I'm not going to mix words on that. I'm not just going to try to fill you with hopium. We are going to take this market realistically. Now, what do we have actually going on? Well, yesterday I was telling you that if we did get that New York Fed inflation rate better than expected, that we should have a pump. All right. We did get 5.2% for 1 year expectation versus 5.9%, previous, and for the 5 year expectation, 2.3%, which is lower than the 2.4% projection. And this is starting to get into line with Jerome Powell's expectations. So Powell wants 2%. And the New York Fed is saying 2.3% is what they project within 5 years. The 1 year is not good enough. So, what does that tell you, AlphaFam? It tells you the Fed is going to continue to hammer this market until this 1 year inflation expectation gets down to 2%, maybe 2.5%. Okay, there's some wiggle room, but at 5.2%, we're not there yet. The Fed is not pivoting. They may just increase rates slower than what they were doing aggressively previously, but they are going to continue to hammer this market. Mark my words, okay? And guys, we do see also coming in today, which was the second pump that we got, was this, this CPI data, which ended up being considerably better. It was one third basically what the expectation was, which was a 0.3%, and we got 0.1%. So even if those numbers are fudged a little, even if it's off a bit, as long as it's under 0.3%, that's pretty good. This was a bullish figure to be receiving for markets, and that's why we got the pump. That's why we didn't just drop to hell. And so, what does that tell you? That if the bears and if just kind of the moderates in the market were trading just normally and were ready to sell at the macro downtrend supply line in the stock market, which is where stocks were positioned, then there would have to be short covering, right? There have to be people covering their shorts, right, today, because we got bullish news. And so the shorts, right, the bears got slaughtered essentially. They had to cover their positions. And what happened is you saw temporary bullishness in the market. That doesn't mean that we're not going to come back and retest the lows. You got to understand that. They're just covering their shorts for the time being. That's what you call a fake out in markets, okay? And then we can see that the core CPI was 0.2% for this month over month, which was better than expected, but still pretty similar to what we've seen. This all is lower than what we've seen in the last, I believe it's like 5 months. So this is a pretty good result, guys. Okay, it looks like what Powell's doing is starting to have effect, and that's why the markets are feeling a little bit more bullish than in previous months. We do see here that, of course, the CPI is 7% by the CPI's inflation measurement, and that contradicts the New York Fed's 5%. But of course, I believe this is the past year, whereas the New York Fed has a expectation for the next year. So essentially, it's saying where we are in the market is going to get inflation down 2%. If our real percent is 7% right now, and the New York Fed is projecting 5%, then what we're currently on course for is knocking 2% off of inflation. But in fact, we need to knock another 3% off of this to meet Powell's target inflation. And so we're just not there yet, guys. Expect more pain in this market, but for the short term, we can celebrate because if this stuff is starting to work and it's starting to ramp up, in terms of its effectiveness, then the Fed doesn't have to be quite as aggressive as it used to have to be, in trying to stem these things. I know that I took a lot of time to explain this, but I hope that clarified some things for others. I would expect, the Fed not to change its interest rates, not to pivot anytime in 2023. There may be some open question after, the middle of the year in 2023. Should something break in the economic system? Should there be war that expands? Should blah, 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 right? Should some type of crisis open up, right? But assuming that it's just business as usual, then I would expect the Fed not to pivot in 2023, and that maybe a pivot would come 2024, maybe even 2025, as we're going to enter into an era of higher interest rates. And these interest rates are just going to be held. It does appear that we've likely avoided the kiss of death in the stock market, but that doesn't mean that we've avoided having to retest our lows or even potentially putting in new lows, if the earnings reports coming into 2023 and in early 2023 are bad, then of course all of these stocks are going to get downgraded. And as stocks get downgraded, that's also going to build in sell pressure. It's also going to, basically put pressure on everything to the downside in the markets, right? So, guys, let's just move on from that. Of course, Federal Chairman, Jerome Powell, will be having his news conference tomorrow at 2:30 p.m. Eastern Standard Time. So don't miss that. That could be another pump moment. It could be another dump moment. It could be high volatility, as often he says some like weasel words and some weird things that just make the market kind of shake up and down a bit. Let's go ahead and just take a look at the expectations from the market. The market got a little bit more bullish after the news from the New York Fed result and also the CPI data. And so now we can see that 80% of the market is looking forward to 50 basis points, and only 20% is looking forward to 75 basis points, which is a net increase of almost 10% in the 50 basis points camp. And what that means is that if it ends up being 75 basis points, we are going to get smacked down in the charts, okay? If it ends up being 50 basis points, it's just neutral and we're just going to trade the chart probably regularly, right? Just kind of normally. And that could be a little bit of a pump. It could be like a little bit more of a rally into next year, or it could just be respecting the downtrend line and the supply line that we have going on, and then doing a pullback and maybe making a higher low, something like this. So basically, just normal trading would occur, and we'd have to look at each chart to figure out what's going on, because 80% of the traders have already calculated that in. Okay, so basically, it would be like Jerome Powell did nothing, right? But if he does 75 basis points, then only 20% of people have factored that in, which means that 80% of the market is going to get caught off guard, caught with their pants down, and so the market will just tank. Now, there could be some variances, because if a Jerome Powell says that he may have to be more aggressive than he thought, or that it's going to, inflation is going to be more sticky than he thought, or if he says anything bearish, it could also bring the market down. If he says things that are a little bit bullish, like, oh, it's working better than we expected, and, whatever, something that might be kind of good for markets, then of course we could see the market rally a bit, maybe even break out of the macro downtrend that it's in. I'm not saying put in a uptrend. I'm just saying it might break that supply line that we've been trapped under in our downtrend. Let's go ahead and take a look at what I was saying about Bitcoin, just for a little bit of transparency, a little bit of truth in advertising in the last episode. And so, of course, I'm making a new episode today with today's momentum pool, following that breakdown, which could have gone up or it could have gone down. We wouldn't really have known. This is just neutral. Just going to pause the video there. You can see that, we were basically flat around 17,000 in yesterday's episode, the episode that I put out, rather, when it might have been 2 days ago or a day and a half ago. But, we had just broken down. We had just broken down from this uptrend that we were in, and we were retesting the uptrend. So this is me trying to tell you which levels to watch to expect a pump or a massive dump, which was defined by this blue box, my alpha momentum pool. The upper limit would suggest a pump, the lower limit would suggest a dump, and then the 2 to 5 day projection just gives us a little extra wiggle room, little extra kind of a jiggle there, just in case maybe, we closed inside of this box. Then, the next 2 to 5 days would suggest that this is how slender that window would have been for us. So here you go. Inside of the pool, bullish on top, bearish below. Having broken down, we did want to see what it was going to do at the bottom of today's momentum pool. We are just swimming around again. The next 2 to 5 day projection does suggest, right along with our structural analysis, right, of a trend that we do need to get above 17,130 to have a chance of pumping here, and both the 2 and the 5 day charts agree with that. So that is an area that we do need to hold pretty strongly. And, just on a daily basis, we will recover our momentum if we get above that $17,030. Let's see. Let's go ahead. So that was pretty specific for you guys, but you can see that I did set very specific numbers to potentially enter longs in. And let's go ahead and go to the Bitcoin chart and see how that played out. So here we have the Bitcoin chart. And of course, we do note that we are just in a macro downtrend. This is June back here. This is December. So this is multiple months of price action. And I do want to just remind everyone that on the log chart, we are in that highly, rejection prone zone where sometimes we get front run, a rejection gets front run. Sometimes we make it all the way to this kind of second level on this rejection zone, right? Rejected, 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 right? And so, guys, like we are crossing into that zone, and it would make sense for us to have a little bit more pump before potentially getting rejected once again. But since we did manage to break into that zone, just like this area right here, just like this area right here, we are able to just swim around in there. So I just wanted to quickly remind you of that, just in case some of you are getting a little, over bullish for what's warranted at this time. If we do break out of this macro downtrend, then we can talk about, a change in the characteristic of the chart. But as it is right now, we are just doing something that's very typical and that has led to macro breakdowns on the Bitcoin chart, or in the past. And so we shouldn't really expect anything different this time. We can just perhaps expect that we might make it across to the other side, just like we've made it across all of these times that we did, work our way into that zone. So, sorry, I was just digressing there a little bit. Let's throw on the alpha momentum pools and just zoom in to see, how that, that call worked out over here on the alpha commission YouTube over here. What you can see is, look, this was yesterday's or the day before yesterday's momentum pool. What we did is we were just swimming around in there. We did get one candle above my hell line, which is what you saw in the video. We pumped after that above the momentum, pool here, and then check this out. Perfectly came back to test the bottom, right? The top of this momentum pool, the bottom of that 2 to 5 day projection that I had, pointed out for you guys. We perfectly sat on top of it and just had a complete liftoff, just pumped off of that alpha momentum pool, right? Off of that alpha momentum pool 2 to 5 day projection. We just absolutely pumped. And what are we doing right now? We got limited by our momentum stretch, which does have us currently testing the upper range at 17,760 thereabouts over here. And you can see, because of this massive stretch of, just momentum, we do have a bottom limit over here, which does suggest that, unless we violate this zone somewhere around 17,100-ish, then, we could still continue to be bullish. It would essentially be just a retest of this breakout. And so by the momentum pools over here, really we'd like to keep above the 2 to 5 day projection. And so I'm talking about 17,212 to satisfy the next 2 to 5 days. You could imagine it could take time to drop down. And so 17,000. 212 is the number that you really want to keep above. But just in the next half day, if we do drop all the way down to 17,100, we'd still be maintaining our momentum for the day. So we do have a considerable amount of flexibility in terms of price movement at our disposal right now, which does make it hard to make a call. That's why I like to make these calls that have good setups, and we don't have to be taking every single trade. You can see we have naked candles here, and so we could easily come back to try to test these candles or even retest the breakout, or we could just continue to pump if we were able to get ahead of this alpha momentum pool and just pump our momentum to the upside, perhaps to this kind of Bitcoin resistance level here. If we look at our support and resistance, then you can see 18,000 200-ish is a little bit of a limit that does correspond with some of these wicks back here. And if we throw on some patterns, we can see that we have a diagonal rising channel, which would also have us bumping our head in that area coincidentally. And then that might just send us back here, or just kind of grinding out this macro downtrend kind of zone right there, right, that we've been talking about. Let me turn off log. Let me get rid of that logarithmic rejection zone. I think we can keep these patterns on as we take a look at another way of viewing that setup. We didn't have this pattern completed when I did make the last video, and so we couldn't have had a trade off of that specifically because we were breaking down at that time. We were not even anywhere in this area, but I did notice that we ended up basically making a inverted head and shoulders here. Now that inverted head and shoulders did have a measured move, and check that out, lo and behold, it's right to where price action went. And so whether we're doing pattern trading or whether we're doing momentum trading, we did actually fulfill the measured move of this bullish thrust here, okay? And so if we do make it across the channel, that would just be icing on the cake. I would just note that the pattern that was being developed here has played out. Okay, it has played out, and this price action doesn't have to do anything from here. It can just check back, and it can even die if it wants to. Okay, so the measured move is completed on a patterns basis. If we do take a look at my hell lines there, what we can see is that we are still above the hell line. So, whenever we're ahead of that line, we do have a chance to pump, right? You can see this nice pumpage here. You can even see a wick off of here, right before we break down. So, yeah, I could definitely see us wicking up to 18,200 before breaking down, or I could just see us continuing to ride this forward. Sort of like what we did here, right? We had a nice pump, had a little bit of a consolidation, and then we pumped again, right? And so right now you can see that this is not a perfect setup, okay? This is not a point where I'd want to be chasing these candles and entering into a long here. And likewise, I wouldn't want to be entering into a short here. I just don't have a good setup, and this just keeps flicking back and forth between bullish and bearish. So the market is deciding at this moment, and so we shall see. We shall see. But if we do just go ahead and throw on the alpha momentum pools again, you can see, of course, that the level that we need to beat in order to capture that momentum to the upside would be 17,773. And if we can put a couple 4-hour candles on top of that number, which you can't see, we're getting a little bit of bullishness right there on top of this momentum pool. If we are able to put a couple 4-hour candles on top of it, then we could see a nice pump. If we do break down just right under that surface, again, guys, like these are key levels that I'm giving you, then of course there's a chance that we just meander in this pool. Just go taking a dive, taking a dip in the good old alpha momentum pool, which we just hopefully we just don't get to the bottom of the pool and then drown, right? Let's go ahead and throw on our alpha momentum scales here so that we can get a little bit clearer picture of what might be going on. Now, the 4-hour is going to be coming to a conclusion in 2 hours, but we do have a estimated neutral level here of 17,845. This probably won't be relevant to most viewers, but if the 4-hour wants to be bullish, okay, and just take control of this chart, then it does have to get ahead of 17,845 in the next 2 hours. Otherwise, it's going to have a bearish bias. And so, as you can see, the price action is grinding its way up to that level as the bulls try to claim that momentum there. However, if we do, of course, break down from 17,773, the upper limit of this daily momentum pool, then probably we're going to get trapped in the 12-hour or the daily momentum. And the 12-hour actually has bullish momentum above 17,472. Now, if we jump over to the 12-hour chart, and this should be relevant for the majority of the viewers, then as long as we're above, this area, above 17,472, then we could reclaim this whole 12-hour candle right here, and we'd still be bullish. We could still just continue to pump. And you can see that on the 12-hour, my hell line is only right there. So it really is giving extra confirmation to that. And then on the daily has an incredibly just exposed naked candle, but you can't see the hell line is all the way down here. And so the estimated daily neutral level is around 17,329. Now, I've fine tuned all of this system. I calculate this momentum over 5 different time periods using 4 different types of momentum so that I can give you as accurate of results as possible so that we can capture those pumpy moves. And we can expect price action if it does break down into the alpha momentum pool to try to tag various levels here and just kind of play ping pong between them until we end up capturing something solidly bullish or solidly bearish. And if I just jump back over to the 4-hour, just because it gives a prettier picture, then we can see that I have raised the demand for solidly bullish on the daily chart simply because it used to be like down here and we pumped so hard that if you want to continue to go, we really are going to have to break that overhead resistance, and we are going to have to work with those EMAs on the higher time frames. And so I would suggest that we need to put multiple 4-hour candles above 18,145. Of course, we're bullish above 17,773 on the day. Underneath that neutral level, I'm not really concerned. I would just consider a retest of the breakout, unless we dip below 17,127. Underneath 17,127, I start to get worried that this is breaking down officially, and I will believe that it broke down officially under $17,085. Now, if we do throw on our patterns again, just that kind of up channel that we have going on there, you can see that these do more or less correspond with basically if price action were to turn around, kind of hang out there, and then start breaking down, right? Something like that. And then, of course, the bullishness would be if, we just kind of skim off of this area and then grab up here And then you can see to be solidly bullish, we really have to put candles above maybe 18,300 even, because we have to get on top of this channel. If we're just inside of this channel, then we're probably going to reject down. So I could probably even raise this a bit. But since we do have this, pretty solid resistance right here, just breaking that could end up flipping it into support, and that could be enough to get us up to 19,000-ish. So I'm not going to put too hard a demand on that. I just want to see some 4-hour candles in there, and then we can talk about that tomorrow or the day after, depending on how things go with Jerome Powell. And again, guys, I don't consider this a trade zone. I consider this middle of the range. We did kind of grab this area over here, but we're not out of the woods. Would really prefer to be up here. And so we could drop down or we could pump up, and it's just, again, just the middle of the range. So let's see. We did talk about structure, momentum. We talked about the macro. Let's go ahead and double check our volatility here. You can see that volatility on the 4-hour, as I was talking about in the last episode, that there was the possibility that that pump that we had on the previous day, that it could just squeak by and make another go for it. And that's exactly what happened, guys. Just a little janky kind of kink in there, and then a new 4-hour epoch kind of appeared, which did just pump us to the upside. Now, volatility is direction neutral, so it could have also expanded while taking price action to the downside. But the whole point here was that it was likely that we were going to have a continuation of expansion, and so that did lean bullish. If we do go ahead and take a look at the 12-hour, you can see that the 12-hour is still expanding. Now, the 12-hour was expanding in volatility with that upthrust, both of them. And so this does suggest that there could be a little bit more to squeak out of this move to the upside. The 12-hour really, it is starting to close, but it's not pinching off or anything yet. It doesn't have this kind of look like this over here. And so, let's be open-minded to perhaps a little bit more carrying forward. However, the 12-hour time frame is quite a long time, and so that could just capture Jerome Powell's decision, and this thing could just, flip around on a dime if he just says something crazy, right? Or we could just start expanding price action to the downside, which, well, again, like this suggests to the upside. So it is what it is. Looking at the daily volatility, we can see that again, it's screaming. It has started to expand upward. It's not over 10%, which is really where you want to see it, before you can make a call on it. So for the daily, volatility, yeah, there's an explosive move that is being developed, but it's not fully baked yet. So again, like we have to wait to see. Does this chart get rejected? Does it end up turning around before the daily is ready? Or does the chart continue to pump upward when the daily is ready, and then the daily takes over and we just have a massive continuation to the upside? We don't know yet, so we're going to have to just touch base on the daily volatility a bit later. Guys, let's go ahead and just briefly throw on, let's just do the simple EMAs. I don't need to get too complicated on that stuff. And we can just take a look at what's going on here from a daily perspective. We do see that essentially what we've done is pump from the 35 EMA up to the 50. I believe I used the 55 here. Yep, the 55 EMA, almost exactly. And so this was a nice move here. We are still above the 4 and the 9, so incredibly bullish. If this thing wants to continue to go to the 89 EMA, then that would bring it somewhere around 18,600 on a daily. If it does want to retrace, then we could retrace all the way back down to 17,180. daily, 17,300, and we really wouldn't have broken anything unless we start closing daily candles underneath 17,300-ish, 17,200-ish. Then I would get a little bit worried from an EMA's perspective. If we do just a jump to the 12-hour, we can perhaps get some insight. You can see that this thing would be ready to go on a 12-hour basis, but having had a little bit of rejection here, maybe I do need to throw on the advanced EMAs. Yeah, we have we have a couple things in the area here. We do have a um, just a 100 EMA, which if I can just make it a little bit brighter, there we go. We have the 100 simple moving average right here that we bumped our head on. So that could actually end up being a stiff resistance. So kudos to the advanced EMAs for giving a little bit of an insight there as to why we might be stopping in this neighborhood. Let's go ahead and go to the 4-hour. The 4-hour, yeah, the 4-hour is definitely suggesting um, there's overhead resistance here, as we do see both the 300 EMA and the 300 simple moving average SMA just basically grabbing us in this area and kind of slowing our roll the same way that the 200 EMA was doing at that previous pump, where we pumped up a bit and then we got kind of paused until that next pump earlier today. So this could end up just sapping our energy and bringing us back down, or it could just, work its way above approximately 17,900, and then it would be free to go. Now, these aren't targets or anything up here. These are just other EMAs that I monitor for long-term stuff. So that's neither really here nor there. But if you did want to just take a look at these EMAs, these are the 800 EMAs, and it would suggest that 20,000, 19,500 is kind of a limit that we would most likely be able to get up to maximally, right? Maximally, that would be some type of limit. And of course, that does correspond with our uber bullishness here. If we did want to reverse this chart on the macro, then flipping that 800 on the 4-hour would be just incredibly bullish. But guys, I think that's just a little bit far away for us to be talking about at this time. Likewise, we're pretty far away from the bottom of this chart, but the bottom of the chart is telling us on a momentum basis, okay, on a momentum calculation basis, that we do have the possibility to drop all the way to 15,250-ish, and then we could catch a bounce even as low as there. Underneath that, all bets are off. Not really sure how we would do it. You would just go by support and resistance. We would have totally lost our momentum, and there would be a lot of work to do to repair the charts. Probably I could get some type of a monthly calculation. I only go up to weekly here, and the monthly would probably have some kind of last resort in the those lower neighborhoods there. But just for, I think we're basically working on the 4-hour charts right now. Maybe we're stretching into the 5-day kind of. We're not even really into those weekly numbers yet. There are some altcoins that are starting to have weekly plays, but they're just really sporadic. And so I just don't think that we're really talking about the weekly or the monthly charts yet. We really are just working somewhere between the 4-hour and the 5-day charts, depending on which move we're talking about. Which is why I use the levels and the momentum, structure that I do use. Guys, I do believe that we did cover, structure, price action, momentum, volatility, and the good old EMAs there. So we should be pretty covered, as long as we also just finish up with the macro, which I did want to point out just one thing here. Let me turn off all this junk that I have, which I did want to point out that that wedge, right, that we talked about in the last episode. So I did notice that we did have this wedge here, and this is generally a bullish structure. These are falling wedges. However, historically speaking, whenever Bitcoin has had falling wedges in the past, they've really been a double-edged sword in the sense that Bitcoin has both uh, dropped off of it. You see, look at this falling wedge here, right? And then it just dropped off. You could say this was probably more of a distribution wedge, right? I've called it that in the past. This would be a distribution wedge, being a little bit more of a right angle back here. But it still played out to the upside also. The measured move on the log scale did end up playing out to the upside and playing out to the downside. You can see on the log scale, this measured move over here played out perfectly on the downside and on the upside. And so Bitcoin really does have an affinity for these structures. And likewise, you can see here before the virus dump, you had a measured move on this falling wedge, and we did have to the upside. But check it out, we also explored the limit to the downside. And so, is that some type of a secret insight that I figured out here? That Bitcoin, right, likes to algorithmically double check both the logarithmic bottom and the logarithmic height of these falling wedges, of even a distribution wedge that kind of could be a jury-rigged kind of a makeshift falling wedge of sorts. And if so, that could suggest the possibility of exploring the upside of that measured move on this falling wedge, and also potentially exploring the downside of that measured move on this falling wedge, which would give us a range somewhere between 25,000 and essentially $9,000, which would allow us to fill in the CME gaps down here and would kind of get people super bullish as they try to fill these CME gaps up here, but maybe just fail, or perhaps we get up there. Who knows? We do have a little bit of an upper limit around 33,000 if we were going to have a big push, though. So I'm not sure if we could really get to that 35 or not, but it's possible. And if we do just disregard the log scale nature, then we do have a measured move of this rising wedge as a failed, just standard, failure pattern. Then that could go as low as 5,000, 5,500-ish. So most likely, if I just had to kind of shoot from the gut, I would say most likely we would see Bitcoin explore both of these levels, 25,000 and 9,000. And then just on our way up or on our way down, there's the possibility of exploring that $35,000 area, or there's the possibility of exploring that $5,000 area, assuming enough bullish news, assuming enough like crazy just crap happening in the world, okay? And outside of that, probably this is our range. But on the fringe, on the extremes of just a world gone mad, right, then we could see these other levels during the bear market. And that's just based upon a premise, just a hypothesis, um, using past price action on the Bitcoin chart. What would that tell me? That would tell me that it's pretty safe to start DCAing in, because probably we're going to return to 25,000 at least, maybe even 30,000. And yes, there is the dangerous possibility that we could have a failed falling wedge, which would then end up at 9,000, or perhaps even as low as 5,000. But at least if we hit those areas, most likely we would come back up to check the 25 to 30,000. And so no harm, no foul, just a little extra time to get there, right? Just again, this is just a hypothesis, not financial advice. And if I called this a rising wedge anytime in this episode, it is a bit late here. I'm getting a bit tired, and I meant, of course, falling wedge. Guys, I think I'm going to wrap it up there. I hope you enjoyed this episode. Thank you for supporting this channel and for being, subscribers. Hope you have been making some money in this pump. I'm sure that there are going to be bigger things to come. Of course, we're in a bear market, and so this is just the time to be learning and to be just slowly accumulating projects that maybe you really believe in, or just trading these low liquidity environments on really good setups, which is hopefully what I bring a little bit of insight to, as well as the macro on a day to day basis. As your alpha for the day, stay safe and happy trading.